So the next question that we're looking at is how much inheritance tax will be payable by Paul on December 2024 transfer of value? Let's see what is the situation here. On 7th of July 2019, Paul made a gross chargeable transfer after all exemptions of 2,60,000. Okay. So this is potentially Paul made a gross chargeable transfer. Okay. So this is a pet. And on 19th of December 2024, he gave 190,000 to a trust. Okay. So Paul agreed to pay any lifetime inheritance tax. So Paul is the one who is the donor, and the donor has given the gift to the trust, and on top of it, is also going to pay the inheritance tax. Okay, so it means that we're going to use the 25% rate, because when the donor gives, we use the 25% rate. Okay, to make the thing simple. So how much inheritance tax will be payable by Paul on December 2024? December 2024 is the date when the gift was given to, or the gift was made to a trust. Okay. So we have to calculate the value. IST will be payable by Paul. Okay. So let's understand this thing. We're going to take this. We have to calculate how much tax. So first of all, we're going to deduct the nil rate band. But before we deduct the nil rate band, we have to consume that before this date, are there any pets or any lifetime transfers? So we will see that the lifetime transfer made on the pet, rather lifetime transfer, but it is a pet since it is not given to a trust. It is on 7th of July 2019. So when we see the date December 2024, this falls within the previous 7 years. So this means that first, the nil rate band will be used for this 2,60,000. And then whatever nil rate band is available will be utilized for this trust. And then whatever chargeable amount is, we're going to multiply that to 25%. Okay. So I have explained this thing. Let me just take this to the Excel sheet and explain it to you. Okay. So here we go. We have this next question here. Fine. So here we go. We have the gift, the CLT, chargeable lifetime transfer. The value is 190,000. And we're going to deduct less the nil rate band, so which is 3,25,000. We first of all take away the 2,60,000, and then we deduct that here minus the 2,60,000. So the value is 65. So we take away the 65,000 here. Whatever is left would be, it's 125,000, and we take the IHT on CLT would be 25%. So we're simply going to take this value and charge 25% here, which is going to be 31,250. Okay. There is this one thing that we have missed, which is here. And there is this, the question has this information which can easily confuse, that this pet is after all the exemptions, but there is no such thing in terms of the CLT. There is no mention of any exemption. So which means that this CLT is also entitled to the annual exemption. Okay. So first of all, we need to give the annual exemption here. So let's have this less the annual exemption. So the annual exemption will be 3,000 plus 3,000. See, the annual exemption adds up. So we take away the 6,000, then it is a slight adjustment. And then there is this nil rate band. So the chargeable value would be 119, and as a result, there is a slight change. So the correct answer is 29,750. Okay. So you need to understand and appreciate this small confusing point that they added here. They have mentioned that after all exemptions, but here they say that there's nothing about this 190,000. There's no exemptions deducted. Okay. Let's see. Yes, let me explain this 25% rate. The IST on lifetime transfers is 20%. However, when the donor pays the IHT, then this means that the value of the transfer is 80%, and the tax is 20%. So it means that effective IHT on lifetime transfers is 25%, which is 80, which is 20 divided by 80 multiplied by 100. Okay, so this is the logic behind it, because you see, the donor is giving the gift, and the donor is also giving or also paying the tax. So which means whatever, when the gift is not 100%, the gift is 80%, and the 20% is the tax. So if we calculate the value of the chargeable value, we multiply that to 20 divided by 80, we get the same answer. So if I just do this, the chargeable value is 119,000, and I multiply that to 20 divided by 80, and I multiply that to 100. So I will get the same answer. Okay, 119,000 into 20 divided by 80 multiplied by 100. So that is going to be, or rather not multiply by 100, just so that get the percentage here. Okay, so that you arrive at the same figure, which is 29,750. But to put things in simple way, if you use the 25% rate to make things simple, 25% IST rate is used when the donor pays the IHT on the CLTs, the chargeable lifetime transfer. Okay, so this is an easy way to understand. I have explained the whole thing because the donor is paying the donor is paying the gift, and the donor is also paying the tax. So this is the fraction. 80%, the value of the gift is not 100%, it becomes 80, and the value of the tax is 20. So overall, this is how the 100% value becomes. So if this is the situation, then we use this fraction, 20 divided by 80, so that sums up to 25%. So if we do the same, we would have that value. So I hope this is clear now, that if we follow this method, so we could have the same rate as we use this 25%, we got this value, and the same result will be achieved if you do this slightly complicated working. So to see this working use, the answer is the same. So it is advisable that whenever the donor pays the IST, it is simply convenient to use the 25% rate. Okay, so I hope this is clear now. Okay. you see, this is a situation. What are we ignoring? We're not ignoring anything. Yes, kindly elaborate on the question. Okay, I'm looking at the questions from the group. Which exemption are you talking about? We have given the annual exemption of 6,000. The solution here. Yes.
Sorry, sir. The question says that after all exemptions. So I was just like wondering why we're ignoring that.
Yes, you see, this is the point that I explained earlier, that this is after all exemption is mentioned about this pet. It is not mentioned about the 190,000 gift to trust. There is no such mention on that. This is a confusion point that wants us to make this mistake of not giving any exemptions to the gift to the trust. Okay. So this is only mentioned, the exemptions part is only mentioned for this 2,60,000. It is after all the exemptions. So that's why we did not consider any exemptions here. You see, I simply took the value, deducted the 2,60,000 here, did not deducted any exemptions. But when it comes to the 190, I had to deduct the exemptions because here there was no such thing mentioned. So I hope this.
I'm only insisting because I was attempting a section C number, and it had the same thing at the top. It says ignore all exemptions, but in the calculations they actually included the exemptions.
Yes, you see, they have mentioned that this value is after all exemptions. So that's why we did not give it any exemptions. Okay. You see, when it comes to the pet, the pet is not chargeable. Is not chargeable during the lifetime. Okay. However, it's not chargeable during the lifetime. However, it consumes the annual exemption and the nil rate band. Okay. So this is the reason that the pet is not chargeable, but for the purposes of calculation, it consumes any annual exemption and any nil rate band. That's why when it comes to the nil rate band available to this 190,000, we would consider this 2,60,000. Okay. I hope this line will help you understand the concept that the pet is not chargeable right away, but when it comes to the calculation of the available nil rate band, we will consider it. Okay. You see, this nil rate band is not available to 260. This nil rate band is available to 190,000, the chargeable lifetime transfer. So whenever we are going to calculate the nil rate, the available nil rate band, we are going to consider any the lifetime transfers within 7 years. Okay. Excellent. Excellent. Okay. So we can now move on. However, you picked a good point, which
Hello, sir.
yes.
Kindly, can I ask you a question?
Yes, sure.
Sir, is it the way that you have answered the question? I was late a bit, but what I need to ask you that the donor and the donee. So if the donor, like now it has then after all exemption.
Yes.
Hello? So this one is a potential when it is alive after all
No,
exemption to sleep.
Listen. You're confusing it. There are two lifetime transfers. One of the lifetime transfer is PET, and the other one is a CLT. You see, this one, the 2,60,000 is a potentially exempt transfer because this is not a gift to or not a transfer to a trust. When you make a transfer to a trust, it becomes taxable during the lifetime. Okay. So we are looking at only 1,90,000 because that is a transfer of value to a trust. That's why we are taxing it. We are not going to tax the 2,60,000. Okay.
Okay, sir. Thank you.
Okay. So moving on to the next question here.